Welcome to Accounting 201. This is a integrity video for lions and tigers, case problem number 1 or transaction analysis. If you are wanting to have the information in front of you, you may pause this video and print out the case that was posted on Angel, and it looks like what is shown on the screen. Okay, so what I've done is I've taken the liberty of setting up the transaction analysis schedule just in a simple format so you can read as I go along. The one thing that you're going to want to do is know where your pause button is and some of those things so you can update if necessary or stop if necessary. So the first transaction is on October 25th, a 2-year lease was signed. The signing of the lease is not an economic event, so you are not going to make any entry. B, on November 1st, Lions and Tigers deposited $20,000 in cash to its bank account. This money was exchanged for common stock. So your cash is going to go up $20,000. And your common stock is going to go up $20,000, and that is your B. So when you exchange stock, that's what you're going to do. C, they pay $500 cash to Redmond Property Rentals for November month's rent. So when we pay rent or we pay anything, our cash is going to go down $500. And then we are going to have a decrease in retained earnings for rent expense of $500. On D, on November 2nd, they pay office twice $1,800 for second-hand grooming equipment. So when they buy the grooming equipment, they're going to have an increase in equipment of $18,000. And they're going to have a decrease of what? Well, cash, because it said they pay. When you see the word pay, we know it's going to involve cash. On November 2nd, they bought office equipment, cash registers, etc. by signing a note for $3,500. Once again, their equipment goes up, but this time they're going to have an increase in a notes payable or a liability. On F, on November 4th, they buy $1,000 in grooming supplies from the dog and pony, $500 in cash and $500 on account. So we're going to have supplies go up $1,000. We're going to have accounts payable go up $500 because we now owe $500, but we're going to have cash go down $500. So this is what we call a compound transaction because it affects multiple accounts. On G, the first employee was hired. This is not an economic event. Just because I hire someone doesn't trigger a transaction. There's no transaction until we pay them. On November 15th, they pay janitorial $350 for their first cleaning. So you have a $350 negative in cash, and you have a $350 negative in retained earnings. Cleaning expense. On November 19th, Carmen is paid, so now you get to pay that employee $125. So minus $125, and then minus $125 for employee. It would be salaries or wages expense. The chart of account is posted under course content. And then on J, we pay $1,000 in cash to Redmond Property for December and January's rent. So we're going to pay $1,000, so cash is going to go down $1,000, but our prepaid rent is going to go up $1,000. Prepaid rent is where we're paying something ahead of time. So we have an asset because we have the right to receive that rent or that space for 2 months. And when we get further down the road, we'll teach you how to adjust that out. So just prepaid rent is an asset. And then on K, Lions and Tigers hold their grand opening on November 29th. The first day of business results in $800 in cash collections. So cash goes up $800, and retained earnings finally goes up. And we're going to go up $800 here, and this is for revenue. And then on L, on November 30th, several animals were groomed for $232 on account. When you see that word on account, it can mean accounts receivable or it can mean accounts payable. Okay? Accounts receivable is we have the right to receive, and accounts payable is we have the right or the obligation to pay. So accounts receivable will be customers, accounts payable will be suppliers or vendors. So this is another $232 increase in retained earnings for revenue. We have now completed all the transaction. The next step in transaction analysis is to go through and add these up. So if I take our $20,000 that I started with way up here, minus $500, minus $18, minus $5, minus $350, minus $125, minus $1,000, plus $800, I'm going to get $16,525. Accounts receivable totals $232. Grooming supplies is $1,000. Prepaid rent is $1,000. Equipment is $5,300 because remember I had 2 transactions here. And accounts payable is $500. Notes payable is $3,500. Common stock is $20,000. And retained earnings is $57,000. So we want to make sure that this all balances. This is a critical step in the process. So we add all of those together. And these here total $24,057, and these here settle $24,057. And you now have transaction analysis. Thank you. Please ask any questions you have via the discussion board.